So in this video, we're going to hear the two things that Chamath Palihapitiya looks out for when searching for the next big investment in crypto. We're also going to hear Chamath and David Sachs share their thoughts on Solana versus Ethereum. Do they think that Solana could someday overtake Ethereum? Or will Ethereum's greater decentralization help it retain its place as the second largest crypto? Let's put our tribalism and bias to one side and have a rational conversation. Hi and welcome back. My name is Tom Heavey. I hope you're doing well. Let's get straight into our first clip.
I have a couple things to say. So I've only been a buyer. I haven't sold a single Solana token. And so we are, net buyers, and we're buying a bunch of stuff. But I hate acknowledging that. And this is why, my tone was more non-committal when we did the pod, is that I really don't like this culture that's emerged via Twitter mostly, where you all of a sudden have to be this maximalist that basically falls on their sword and never sells in order to be legitimate. And I think that that's a really dangerous place to be. So, look, if I take a
Why is that dangerous? Yeah.
Well, if I take a much, much bigger step back, let me put Solana in the context of crypto, and let me put crypto in the context of the markets and where we are today at the end of the week after, Q3 earnings in November of 2021. We have the stock market at absolute all-time highs.
Ripping.
We have crypto at absolute all-time highs.
Ripping.
We have the art markets. I don't know if you guys saw Phillips and Christie's and Sotheby's this past week at absolute all-time highs.
Sold another Beeple for $25 million.
We have inflation at a 30-year high. We have 10-year break-evens at a 25-year high. We have, $1 point some odd trillion that we just approved last week, and we're still horse trading on another $1.8 trillion of stimulus that we're going to put in. And so then you have, I think the most important thing, which is the two most important founders of our generation, the two smartest people who have really consistently won, Elon Musk and Jeff Bezos, have collectively sold more than $11 billion of their holdings this year alone. And if you can't take all of that and decide for yourself what's right for you and your family, you're doing yourself a disservice. I think it's important for me to never sort of be forced to tell folks whether I'm buying or selling, although I'm willing to do it in moments where I think it's important. But I think it's really important to understand the context. And so I think these folks that think derisively about individuals who are managing risk, I think it's really naive. And I think it creates a lot of missed opportunity for them as well. If the smartest people in the world are now selling their core holdings that they told you they would never sell, and you are not reconsidering your position on things, you're either much smarter than them or you're being really, really reckless.
All right, there you have it. Yeah, and we, just so people also know inside baseball, we have a docket of stories that we talk about on our group chat that make up the docket for the show, but I'll bring stuff up, and I didn't bring that up in some way to cause trouble or anything. I thought you guys would want to clear the air about it. And I understand Chamath's position of, hey, you don't want to give these things oxygen or whatever, but I think Sachs
I didn't even know that we needed to clear the air until, I went to the conference and enough people mentioned it. So,
well, but what's so funny is half the people on Twitter spend all their time in crypto land saying things like, never going to make it, have fun staying poor. They're extremely, Jason, as you said, tribal. I'm not sure that they're doing first principles analysis of these things.
They've
gotten exceptionally lucky.
Yeah.
Some of them are exceptionally good, but many people, broadly speaking, have gotten exceptionally lucky. And I think a little bit of it is getting to their head where they become, very virulent against people that they think, whose perspectives may actually be negatively affecting their position without actually understanding what David said, which is these are incredibly deep liquid markets, and one person's opinion can't do much of anything.
I mean, that's a really good point. I'd like to give my opinion on Solana, but the thing, or just crypto in general, the thing that's hard about it is that it's hard to talk about the benefits of, say, the Solana blockchain without being seen as a pumper of Sol or a dumper of ETH or whatever, because all these things are so intrinsically connected. I mean, I learned a lot of really bullish things about Solana, at this conference. I mean, the biggest thing is, I mean, there's basically a battle for the hearts and minds of developers going on right now between Solana and Ethereum. That's why Solana has raced up to, over 200. I don't know what, like 7,000% increase or something incredible like that. The reason is because Solana as a blockchain gives confirmations back in something like 400 milliseconds, whereas Ethereum takes, minutes. And, a transaction that might cost tens of dollars, 10, 20, 30, $50 of gas on Ethereum costs pennies on Solana. And so
it's
that's
disruptive.
the advantage.
Yeah.
Yeah, exactly. It's also, a lot of developers feel like the developer tools that they've created are easier than building on Solidity. The thing that Solana gives up, the trade-off that it makes is decentralization. There's basically that transactions are processed by 20 validators and they're a top 20 based on holdings of Sol. So it's kind of like this proof of stake model. So anyway, there's some trade-offs there. I can tell you that, it's the view of, our friends at Multicoin. And, I heard a lot of this view at the conference, although obviously you have to take it with a grain of salt because these are the biggest believers. But their view is that Solana over the next year will flip Ethereum based on developer activity, that there's real companies being created.
We spend a lot of time actually before we do anything, is that's the only thing we've been looking at, and Syndica, Fractal, a lot of the stuff that we've done, DeSo, is purely driven by developer interest. When we see developers in the open source ecosystem building things on top of this stuff, making stuff that's composable and usable by other people and building infrastructure, we don't really second guess that because they are spending the most important currency, which is not monetary capital, but human capital.
Yeah, their time, their skill.
Their time and their skill and their reputation. They can apply to
another project. Yeah.
And so when enough developers, so I've always thought you just follow the developers, and as more and more projects get started, you just have to unemotionally support that. I think the writing is on the wall, which is Bitcoin is gold, Ethereum looks like it's trending to be silver, and Solana could be the first, but there will be others that come after it, of real developer ecosystems that can be built on top of it. The other thing that I would offer up to people for them to think about is, before you blindly go and rush into crypto, one way in which I try to think about these things is in the following way. You see these projects get started all the time, and I would view each of these projects as a mini economy and really try to think, what is the economic value of what's happening under the hood? So simple example, Helium is an interesting project that's trying to build a completely decentralized, 5G infrastructure, right? Render is a really interesting project that's trying to build a completely decentralized, graphical processing infrastructure, right? GPUs essentially. In both of those things, you can quantifiably, economically measure what the value is that people get, right? In the case of Render, you're basically displacing an AWS instance. And so, that has a price and a value. And so, for Render to be valuable, there's an economic value that it replaces. If you're joining a hotspot, that has an economic value where you hadn't necessarily have to pay, to get internet connectivity. If you all of a sudden are on the Helium network, that displaces a measurable economic quantum. Understanding that is probably, and taking the absolute value of that, is the best way of really understanding which projects have potential. So if you take those two ideas and marry them together, where is their developer interest and where is their measurable economic activity? At the intersection of those, I think, are the really compelling projects that can win.
Okay, so the first thing I'd like to touch on from these clips is the tribalism that exists in crypto. For those who don't know, I worked full-time in crypto for 4 years. Here on YouTube, if you go back to my older videos, you'll see that I interviewed founders of dozens, if not hundreds, of different crypto projects. And one thing that I've never understood in that entire time is the bias that people carry towards their own investments. If you want to be a good investor, you need to be rational, even somewhat cold, with your decision-making process. It's fine to criticize or compliment projects. When you look at the debate between Ethereum and Solana, for example, there are clearly pros and cons for both projects. If there weren't, then neither project would be as successful as they are today. And by successful, I don't mean the price, because let's be honest, any project can rise in a bull market. No, I mean by developer activity. I mean by the number of users on their blockchains. I'm talking real adoption. So if you want to be successful as a crypto investor, there are 3 key things for me that you need to know. Number 1, how to find good projects. Don't rely on the gurus online. Don't listen to the opinions of YouTubers or bloggers, even me. Do your own research and look for 2 things. A, follow the developer activity. And B, look for real, measurable economic activity which is being disrupted.